the outlook as far as the currency is concerned, specifically in the context of what's happening with other emerging market currencies as well as with the dollar rally?
Yeah. So, Shireen, the big thing we all have to watch for is the tax package in the US. Again, all our contacts in Washington are telling us that there is a very high probability that a fairly stimulative tax package will pass the US Congress. Republicans have majorities both in House and Senate, and this is a topic they agree on, unlike the health care bill, which they did not. If that happens, and there is a pretty large repatriation portion of that tax package, the dollar could strengthen quite a bit more. And so far, see, small dollar strength is not bad for EM currencies because it's generally based on a strong US economy, which is good for most EM countries, for exports, for everything, right? So that's generally taken as okay. Small, local, 3-4% moves. But if you get the dollar strengthening 10%, which is a possibility by
if the tax plan goes through.
Yeah. Again, depends on what the final shape of the tax plan is.
Sure.
Are we talking about corporate tax rate down to 20%? Are we talking about full homeland investment?
Yeah.
If all of that goes through, then the dollar, by some observers' point of view, could appreciate as much as 10%. In that case, EM currencies will suffer a little bit vis-a-vis the dollar. I think no denying that. But again, it's not because India's fundamentals are bad. Everybody will take it in stride that this is just a dollar rally that's going on. And in fact will give me a better opportunity to re-enter India. So it's not like the 2013 fragile 5 syndrome, because our fundamentals are that much better. Our reserves are over $400 billion. Our coverage ratios are very good. So I think all of that is there. And you have a strong government, you have a strong RBI. So all of that is in place. So I don't think people will sour on India because they'll just feel this is an overall dollar rally. Let me step aside. And maybe at 66 or 67, I'll get a better opportunity to re-enter India. And that's how they'll think about it.
So is that where you see the rupee headed in the short term?
No, I was just giving an example based on how strong the tax package is. But I think at 63.5, all the good news was built in. And the dollar was about to turn anyway. So this move up to whatever 65 plus is okay. It does not surprise me. It does not make me feel bad about India. It's just seems okay in terms of the range that we've been in, and we had a pretty strong move down from 68 something. So it's fine. If there is a very strong tax package, then yes, it can go to 66, 67. I think it could go there.
So where would India stand in the context of the stories that you hear from other emerging markets? You were talking about China and how the bank in China is looking at what India is doing and looking carefully at the moves that we're making. But as you look at other emerging markets today, what stands out and where does India stand relatively in context?
So, Shireen, the one good thing that's happened is that emerging markets have become fairly distinct entities. The correlation is somewhat lower. It's not 0, it's not even 0.2, but it's not 1 that it used to be in the previous years. So people do treat South Africa differently from India, from Indonesia, or Brazil. What I can tell you is global investors right now are most excited about Mexico because there is a very large opportunity for an interest rate cut cycle. They basically had to hike a lot because of the elections, US elections. That Donald Trump came in, Mexican peso weakened a lot, so they had to hike rates. Most participants feel that that will all reverse. So you could have a very large 200 plus basis point easing cycle. And by the way, the governor of Bank of Mexico is one of the best in the world. He's, by the way, a friend of Ragurajan, Agustin Carstens. He's stepping down, but he'll set the platform for a rate cut. Brazil has seen a very large fixed income rally. Their rates have been cut by something like 6 percentage points in the last 18 months. But there is a big political problem there. The previous president was impeached, and the new one also has a lot of cloud hanging over him. So we'll see. Eventually, this will all get resolved by the elections next year. Russia actually runs a very large real interest rate situation. Someone like RBI, they were worried about inflation expectations and kept interest rates very high. But they also were genuinely worried because crude oil prices had collapsed. They've actually managed their economy reasonably well. So a lot of investors are very keen on Russia. The problem there is global headlines of Syria, their involvement there, plus US sanctions on Russia. But still, a lot of bold money is going into Russia. Some into Turkey also, real and nominal interest rates. Well, nominal are quite high there. So they are keen on that. India, I think, feels like in all of this, India feels like South Africa has a very important election coming up. If that election is good, there will be a tremendous rally, probably the biggest in the world in South Africa.
Really?
But it's a digital 0-1 event. If the election doesn't go the right way, there will be a big sell-off. So most people are very nervous. They're just putting in small bets right now. In all of this, India does not stand out as a very big potential payoff. It's a very well-run economy. The domestic fundamentals are decent, but it's not like you're going to get 100 or 200 basis point capital gains in your bond portfolio. So that's why people are, I think they're opportunistically, they come in when they feel both the currency and rates are backed up. So my entry point is good, but they will not necessarily chase. And on the equity side, I think they genuinely feel that the market is fully priced.
Yeah. So let me end then, Pankaj, by asking you, what will be the key triggers that you would watch out for as we close 2017 and get ready for 2018?
So I think the US tax package is very important. That's the first thing. I would look at ECB tapering, how aggressive they want to be. I think that will be important. The ECB will also pick a new president at the end of 18, and some talk is the next one may have to be that Angela Merkel will want a German to be in that seat. And so the choices there, one of the choices there could make ECB a lot hawkish, more hawkish than it is right now. So that remains to be seen how that gets played out. The EM countries, I think, are just doing their own thing. So you have a Bank of Brazil that's easing quite aggressively because their focus is on the economy, and they're doing a good job of that. You'll have a Korea which will be hiking, and India somewhere in the middle. So everyone is sort of doing what's right for their own country, which is the right thing to do. I think we're not as synchronous as emerging markets used to be, and that is why we need people watching each one of the countries a lot more intently.
Right. Well, Pankaj, it's always a pleasure speaking with you. Thanks very much for joining us here on CNbc TV 18, and wish you the very best in your new role.
Thank you.
And enjoy London. Thanks very much indeed.
Thank you, Shireen. So nice to talk to you.
Good to talk to you as well. With that, it is time for us to wrap up the CNbc TV 18 special from all of us here. Goodbye. Many thanks for watching.